Ladies and gentlemen, welcome. Peter Oloch is my name. I'm a stock market investor and a researcher in the stock market. And today's topic is very simple. Don't borrow to invest in the stock market. That is the topic. Don't borrow to invest in the stock market. I have a Telegram group, and on the Telegram group someone asked me, "Hey Maze, these things are so nice. As in, you can make 10% return per year, per month, and you can make 10% return per year. Is it okay if I can go borrow in the circle, then come invest, or go borrow in the bank? I can borrow $500,000, then I come put it in the stock market." Someone also asked me that he wants to send his child to America, but before the child goes to America in some 4 months' time, he has some $1,000,000 that he wants to put in the stock market. And so he was thinking that if he can make 10% return every month for 4 months, then he can, out of $1,000,000, he can make 400,000. I have many people asking me questions if they can borrow money and invest in the stock market. Ladies and gentlemen, let me tell you one thing. The stock market is very risky. What I've done is just to try to simplify the process and tell you that it's easy, but it's not. You are riding on my coat of experience, skills, to know or to navigate the stock market. The stock market is very risky. Many people have made losses. Ask your friends. Ask older people. Ask around. Do your own research. You will be told one thing. Many people have made losses in the stock market. Now the risk is this. You can borrow well and put the money in the stock market. Buy stock A or even buy Safaricom, the largest, the giant in the stock market. You can buy Safaricom, then all of a sudden it starts going down and you wonder, okay, what happened? But basically there's something in the market called market volatility. Stocks go up, go down, go up, go down, go up, go down, go up, go down. It happens all the time. All the time there's market volatility. So you can borrow, then all of a sudden the stock goes down. Then you know what? With borrowed money you need to repay every month. So you are repaying money and you've already borrowed and you're not seeing the profit. Friends, it is very depressing. I saw this firsthand. In 2008, 2009, when Safaricom came to the IPO, it was selling for 5 shillings. And after a while, it went to 8 shillings. And before long, Safaricom went down to 2 shillings and 30 cents. Those who borrowed, and many Kenyans, thousands and thousands of Kenyans borrowed. They went to the bank, got money, bought Safaricom at 5 shillings. Everyone was excited, man, Safaricom is going to 100 shillings, 50 shillings. Everyone was going to be a millionaire in Kenya. It never happened. From 5 shillings, Safaricom went to 8 shillings. Then it dropped to 2 shillings and 30 cents. Many people were discouraged. Many people were under siege. Many people were under siege. Kenyans say under siege. Things were very difficult for many people. Many people sold their shares at a loss. Many people said, okay, this stock market thing is a scam, this thing doesn't work, this thing is terrible. So the message is this: don't borrow to invest in the stock market. Stock market has performed dismally, or rather, stock market performs dismally to those who are not smart. You need to be very smart. You need to know what you are doing. Otherwise you make losses. Kenya Airways, for example. Kenya Airways was selling at a high of 147. Then Kenya Airways dropped 140, 130, 150, 60, 20. What? Kenya Airways reached 1 shilling from 147. 1 share. What of Mumias? Same story. Mumias was selling at a high of almost 60. Mumias dropped down. So imagine you bought such a share. You bought it at 60 or 57, then it starts going down to 55, 50, 40, 30, 20, 10, 1. And you borrowed money. What of Nation Media Group? Nation Media Group was one of the blue chip stocks. It was, one share was selling for 330 shillings. That's the highest it went. So you borrowed money because you're thinking, oh, it's going to 500. Well, guess what happened? It dropped to 300, dropped to 50, dropped to 200, dropped to 150, dropped to 100, dropped to 50, dropped to 20, dropped to 10. And you are on borrowed money, my friend. You go crazy. Never try that. That's not the only one. Out of Bamburi, many stocks have performed dismally. I am reading this book by Benjamin Graham, forwarded by Warren Buffett. This is what they are saying on borrowing, page 34. Frankly, we cannot imagine a market of future in which there will never be any serious losses, and in which every tyro will be guaranteed a large profit on his purchases. This is what they are saying in short. There is no market in which the future of profit is guaranteed. There is no guarantee in the stock market. There is no guarantee in the stock market. Losses will always be there. This is again what they are saying. Don't borrow. The principle of investment as set forth herein will call for the following policy under 1964 conditions in order of urgency. 1. No borrowing to buy or hold securities. Securities in this case is shares in the stock market. 2. No increase in the proportion of funds held in common stocks. And 3. Reduction of common stock holdings where necessary, where needed, to bring it down to a maximum of 50% of the total portfolio. I will discuss the other points they are talking about later. But the first point is this. Don't borrow to buy securities. Don't borrow to buy stocks. Don't borrow to buy shares. Don't borrow to buy bonds. Don't borrow. Use your own money. Use your own savings to buy stocks in the stock market. Asanteni sana. Bye bye. God bless you. Tuonane Rosho. Zaijian.